Hi, everyone. I'm Madhav Rajan. I'm the Dean and the George Schultz Professor of Accounting at Chicago Booth. Thank you all for taking the time to be with us here today. I'm thrilled that you could be here as we welcome Booth alum Dan Caruso to our Distinguished Speaker Series. The space behind me is blank, but I'm actually doing this from our brand spanking new campus in London, the one we were scheduled to open in March of 2020. But it's now open, it's running, and I'm thrilled to be here and do this event from here. So the speaker series, this is a long-standing tradition, the DSS. We bring in high-profile leaders from the government, from business, from the community, to the school to share their insights and experience. We moved to the virtual model last March when the pandemic began, and we had several alums, execs come in to speak about their company's experiences with COVID in particular. We had great chats with Kurt Delbene from Microsoft, Jenny Scanlon from UL, Tom Ricketts from the Cubs, and many others. And we learned a lot about how these companies were responding to COVID at that time. We resumed the series last fall, and the events turned out to be so popular that we have continued to do them from a virtual format, and we're able to get great people to show up and to have many more of you attend than could have been if these events happened in person. We've had great talks starting this academic year with Eric Gleacher and most recently with Russ Hutchinson from Goldman. With that, I'm thrilled to introduce today's speaker. Dan Caruso is the founder of Caruso Ventures and chairman of Endeavor, Colorado. Caruso Ventures includes Dan's family office, the investment portfolio, and nonprofit activities. And Endeavor, Colorado works with high growth companies supporting entrepreneurs. Dan also served as executive chairman and interim CEO of Cold Quanta, a leader in cold atom quantum technology in 2021. So prior to this, Dan was the founding CEO and the chairman of Zayo Group Holdings, a global provider of communications infrastructure. So this is a venture where investors saw an $8.5 billion equity exit on $1 billion investment. Prior to that, Dan was a co-founding exec of Level 3, and joined Metropolitan Fiber Systems as it began to scale as well. All of them exited for enterprise values greater than 10 billion. And Dan also led the take private of ICG, which achieved a 25x return, and then led to the ideation of Zayo. Dan is a supporter of the Colorado and the Chicago entrepreneurial communities, and he's a 2016 recipient of Chicago Booth's Distinguished Alumni Entrepreneurial Award. Dan, of course, has an MBA from Chicago Booth. Prior to that, did a BS in mechanical engineering from the University of Illinois. Thank you very much, Dan, for being with us here today.
Well, it's my honor. I appreciate this opportunity.
So, Dan, just to get started, maybe it would be great to sort of step back in time. Could you go back and talk about sort of how did you decide to come to Chicago Booth after majoring in mechanical engineering at Illinois? And sort of then moving on from there, how did coming to Chicago impact your career going forward?
Great, absolutely. I grew up just south of the city, so probably 20-minute drive from University of Chicago, so an area called Glenwood. I went to Homewood Flossmoor High School. When I went into engineering, I went in, I think in part because my dad was an engineer, in part because I knew I had some aptitude for the technical side. But it was really clear to me during the engineering program and afterwards that my real heart was in business. So I began my career at Ameritech. My first paycheck actually said Illinois Bell, but I was in a management development program that gave me great exposure to their business. And it was while I was in that program that I went to the University of Chicago. And frankly, there's zero chance I'd be where I am now or anywhere close to it if I didn't have a great launching pad from University of Chicago. It gave me the ability to really fine-tune my analytical skills around business and my confidence that my instincts around business could hold up to the scrutiny of world-class business talent. So I am very fortunate to have had that foundation.
So you've had multiple successful exits, as I had mentioned, with MFS, then ICG, Level 3, and certainly Zayo. All were in similar markets, involved, fiber of some kind or the other. Maybe you could just explain to the audience, what is the fiber business and how did you sort of identify that opportunity?
Yeah, so one of the reasons I joined Ameritech coming out of college is there were three big trends that were taking place. One was that the monopoly phone system was being broken apart and was going to be opened up to competition. So big regulatory change. Two, there was this notion that data was going to overtake voice. Now, that sounds pretty obvious today, but back then it was usually followed by the question of, what do you mean by data? Like, what are people going to do with data? You know, how could that possibly take over voice and communications? It was hard to even explain it, but it was a powerful trend. We didn't use the word internet at that point. In fact, I'm not sure people necessarily equated data and internet so closely. And then the third thing that was happening was fiber optics, that fiber was going to transform communications. And I guess you could say a fourth was mobile communications as well, was at its very early stages. So I chose an area based on these combined elements of change that were going to happen and just totally transform an extraordinarily large industry that touches across all industries. And let's just say, whether it was by luck or logic, it was a good choice, because I was able to ride kind of a multi-decade, a generational trend in the transformation of communications. So we ended up, even though we didn't really use the word internet when I first joined MFS, within a handful of short years, we were carrying more internet traffic than anyone in the world when people were first discovering what the internet is. So one way to think about what I've done is all around internet infrastructure. So the underlying infrastructure that it takes to move all this bandwidth around at its core. So how do you take it from the edge and get it to wherever it needs to go, whether it goes into cloud environments, whether it goes in between individuals and between machines. Each generation of what I did was the underlying infrastructure of the internet itself.
So you've managed 4 successful exits, as I had mentioned, right? Most people would be sort of very fortunate to have just one. So what kind of keeps you going? What sort of led you to say, oh, I want to try the next one after you had the first big success?
Yeah, it's a great question, but you see a lot of examples that people who've achieved a lot of success, sometimes people just take their success and, they've had their chapter and they live the rest of their life based on that success they had. But when you look at whether it's in athletics or it's in entertainment, you see people who've had plenty of success and they keep wanting to aspire for more. And the same is true with business. When you look at some of the most successful business people that we think of today, they could have been done 10 or 20 years ago and they still would have been successful. At this point, what drives me is the desire to have as much of an impact as I could have by helping others achieve success. And I think I'm in a unique vantage point to do so. But earlier, like why did MFS leave level 3? Well, it seemed like unfinished business. We were acquired by WorldCom. We knew we had built something significant, but we also knew even though we exited for a really nice valuation, we also felt like we came up short. So a sub-element of that team got back together. In our case, moved from Chicago to the Boulder area, and we started level 3 communications. And we felt like we were incomplete, but we started in MFS. In some ways, that's what led to Zayo as well. Level 3 survived and did okay during the whole telecom and .com meltdown, started to get momentum again, but again, it felt like unfinished business. And Zayo for me was the chance to build something where I was the founding CEO, and it would have the ultimate success of establishing kind of a brand and become a company that would survive many decades as an independent company. And we're 15 years into it right now, and the company's still going strong.
Mm-hmm. So did you have a same team, or at least a core of the same team that sort of moved through this organization, Stan? Is that what you were saying?
Yeah, there definitely was the same people who were in and out of core teams that stayed together in each of these ventures. So there were people at Zayo, for example, who were with me in all 4 of those ventures. Not very many, but a handful. And there were dozens and dozens and dozens of people within Zayo, I would even say hundreds, that were either at level 3 or MFS or with me at ICG. So a big part of the success of the multiple companies was because there was people that I built relationships with that I could rely on, who could rely on me to get off to a good start in that next endeavor that you set out to do.
Mm-hmm. So you had mentioned earlier about noticing these trends, and so many of your fellow alums have noticed your ability to sort of see and anticipate trends, how do you think about that? How do you think about identifying opportunities as you're looking for companies in which you invest, for example?
Yeah, I mean, there are so many opportunities right now. I mean, the transformational change that we're all witnessing in real time, it's been happening for years, but obviously with COVID, it's happened at a more accelerated scale, and one which is more visible to a lot more people. And in some ways that's good, because it means there's a lot more transformational trends that we're all going to be able to kind of collaborate on as you go forward in the next decades to come. In some ways, it could create a lot of noise in the system, like which ones are the real trends and which ones aren't. And I think for me, it's staying very active in the information flow. Always trying to learn from whatever the newest thing is by getting myself in there, getting active, finding the experts in the field, trying to get hands-on, whether as an investor or by using the latest and greatest social media tools or software as a service tools, so that you start to have a direct feel for how these things come together. Because the big opportunities are things that arise from where multiple trends converge with each other to create something that was almost hard to imagine before these different trends started to collide against each other. But if you're comfortable with those trends and you're staying at the leading edge of them and you're not afraid of them, you'll be able to pick up on those. You'll see around the next corner, or maybe the corner after that, before others will, and position either your company or you as an individual to take full advantage of this exciting opportunities that are all around us right now.
Mm-hmm. So Dan, we had some questions that came in from the audience in advance, and I want to encourage the people watching, listening in, to submit questions via the Q&A feature, and I will get to them. So please feel free to do that. So one alum wants to know, had sent the question in, what themes could one predict for the economy, say longer term out, right? 30, 40 years out. And the alum said, we could scarcely have imagined smartphones or YouTube if you go back 30, 40 years ago. Sort of looking ahead, are there things that you feel like we should be thinking about?
Yeah, I mean, what's going on right now is so powerful in so many different areas. It's hard to vision how they will fully come together. I've spent a fair amount of time in the area of quantum, for example. And quantum, it may not be self-evident in the next 3 or 4 years, but if you go out 10 years or 20 years, or especially 30 years, it's going to change fundamentally, not just business opportunities, but life in general. We're going to be discovering how to harness the true powers of how the world really works in ways that we haven't even fully understand the underlying physics yet. But when you combine that with what's going on with robotics, with what's going on with artificial intelligence, with space exploration, and and the amount of money being spent in space today, we all have concerns about the environment and global warming. I mean, technology, call me a little bit naive in this category, but technology is going to get ahead of that, and there's going to be just gigantic step functions in how to deal with that are going to just change where energy and fuel comes from and how it gets consumed. And I have all the confidence in the world that big opportunity is going to be in that area as well. How to produce food, how to eliminate disease. I don't think we're going to have to worry about things like COVID 5 or 10 years from now, because of the rapid advancement in medicine and biomed. I mean, every area you could think of, there's significant advancements. And when 2 disparate areas or 3 disparate areas come together, that's where the big opportunities will emerge.
Mm-hmm. That's fascinating. So the one of the alums had sent a question about thinking of the future and sort of from a worrying tone, saying, Gen Z and millennials will be much of the workforce. I think the alum meant that as a negative. Natural resources may be dwindling, but your view seems to be, no, the key is to think about what can we invest in that will sort of overcome those things rather than worrying about the problems necessarily.
Yeah, absolutely. I think the amount of investment, the nice thing about all the wealth that's been created in the tech economy over the last few years is a lot of the people who have that wealth are wanting to reinvest it to create gigantic change. and they're going to, and many of them are aiming toward the environment. And so they're going to, my confidence in entrepreneurs coming up with ways of, I mean, as much as Earth is limited, space and what is outside of Earth is not limited. And how do we harness that to bring energy and back to Earth? That might look daunting. Certainly, it would have been very daunting 10 or 20 years ago. It still looks daunting today, but a lot less so when you see the amount of space activity that's underway. So, and even in the area of quantum, I think quantum is going to help us discover ways of harnessing energy that are hard to fully get our arms around today.
So let me go to quantum, and then I'll go back to the other topic, Dan. The one alum wants to know, what are the use cases of quantum that you think would generate a tipping point? Given that, as you mentioned also, right, companies are still trying to figure it out. So what are sort of one or two areas where you think it might have an edge in changing things fundamentally?
Yeah, I mean, when people talk about quantum, they almost always talk about quantum computing, and for good reason. Quantum computing is where most investment is going into. When they do, for those of you who aren't as familiar with quantum computing, you can think of every advancement to date in computing has all been based on how fast can you process bits, ones and zeros. So an abacus was really slow. Today's most modern computers are really fast, but it's all around how quick can you process ones and zeros. For the first time, pretty much ever, the fundamental science of computing is going to change. So quantum computing isn't about processing ones and zeros more quickly. It's not about bits, it's about qubits. And qubits take on very different properties, and you're able to engineer a computer in a fundamentally different way, and hence be able to solve problems that are otherwise untouchable by not just today's fastest conventional computer, but the fastest conventional computer you can imagine can't solve these same problems. So coming out of that, it's going to be discovering new materials, discovering new ways of fighting disease. There's going to be solving problems that otherwise can't be solved, that will lead to advances in manufacturing and robotics and even space. So computing is a big deal, but that might only be half of what's about to change. The other area that is talked about a lot is quantum sensing, and quantum sensing has far-reaching applications. I think the killer application may turn out to be mobile communications, because quantum radio frequency receivers are much smaller, lighter, and can work across much broader spectrums, and therefore might be transformational when you think about 5G, 6G, and beyond networks. So like all the areas of fundamental change, the biggest impact is very hard to predict at this stage. You just know the impact will be big.
So just for the participants, you should know that both Boulder, so Dan is in Boulder, remains very involved in Chicago, and both Boulder and Chicago each host one of only 3 NSF institutes for quantum. And Dan participates in quantum at Boulder and in UChicago's quantum efforts, including the our quantum accelerator Duality. So if from your standpoint, Dan, do you view quantum as interesting from a business perspective, but also I would say with the potential to just change the world fundamentally?
Yeah, absolutely. And my interest in quantum stems from both of those as well. The interest started with just the fascination of, how can the way the world really works be something we're just discovering now? That's what got me interested in quantum to begin with, and what does it really mean? But then as it got deeper and we start to learn how to engineer quantum systems, what will that really lead to over time? I find fascinating, and I think there's going to be huge business opportunities that come out of that. And that's, right now, I think there are investment opportunities already, and that's just going to grow over the next 5 and 10 years.
So one of the alums wrote in a question about how do you view the massive amounts of private capital flowing into the young and small quantum computing space? Maybe if I could add to that, I mentioned the NSF institutes, but the US government is sort of getting into it too. So do you feel this is an area where the private capital is going to dominate, or public-private partnerships, or the government's eventually going to be the one sort of dominating the space?
Yeah, I would answer that question to say this is a lot more like the internet than it is about kind of space exploration. I mean, space exploration until recently has been largely based on government dollars, but the internet started out with a heavy government influence, but what really made all these opportunities that were enabled by the internet happen was private capital. And I think that will be true with quantum as well, that the opportunities to put private capital to work and produce businesses. Another current analogy of that is blockchain. I mean, blockchain's that's another area that's going to have such far-reaching impacts on society. And will it be public or private that does it? That one's a little more obvious. It's going to be private capital, but it's that transformational of a change that is right in front of us.
So when you speak about blockchain, you're viewing blockchain as sort of distinct from crypto or currencies, or do you have a view on that as well?
I view blockchain as kind of the broader umbrella of opportunities that will get enabled by that category of technology, where crypto is obviously the most prominent example of that. Yeah, I think I'm not an expert in crypto. I've been fortunate to be an investor of one of the most impactful funds that are designed around blockchain, which is Polychain. So I have some level of insight through them about how to capitalize on opportunities. But yeah, I think on the crypto side, I think it is real. I think it will transform the way global currency works, and I think it will made and have a bigger impact on kind of other systems that involve data, but aren't necessarily financial systems, how records move around and are kept. And and again, it's one of those things where when you combine blockchain with other business opportunities, what will come out of that is probably going to be as transformational as anything that has happened over the last 20 years.
We have a question that came through the Q&A. What are your core philosophies in life? And what are 2 or 3 things you would say are the key reasons for your success?
My core philosophies in life have evolved a lot. I mean, if you went back 10 or 20 years ago, I was one of those people who was all about my work and some family life alongside that, but it was about how to make the companies successful, how to do well for the investors. It was very I would say narrowly focused. That's evolved dramatically, where I view now my responsibility and my opportunity, because it's something I enjoy as well, is how do you help others kind of achieve success in the journeys that they're on. So how do you find those entrepreneurs who are trying to do something truly impactful, are on a good trajectory? How do you help them get all the way to the promised land and beyond? And in doing so, how do you set an example for them where they use their platforms in order to help others who will come after them as well? I think that's the way where I can give back in the most significant way. So I would say what helped me be successful is different than what my life is all about going forward. And what helped me be successful is certainly you had some natural skills, whether it's area of intelligence or able to kind of piece things together, but it was also the intensity of work. Not too many people outworked me during the prime of my career. And I think working hard is a big part of success.
We had another question that came in. What advice would you give to quantum startup companies?
Oh, what advice do I give to quantum startup companies? One is, if you're going to focus on the computing aspect of it, either think about it from the perspective of the supply chain that quantum computing, because quantum computing companies are being funded in gigantic ways, but there's only going to be handfuls of success in in the actual quantum computing hardware. So if you want to start up another quantum computing hardware company, I would say be a little bit careful, unless you've got billions and billions of dollars to spend. But those companies who have billions of dollars are going to need to rely on others for their supply chain. So how can you fit into their supply chain and play a critical role? And then secondly, there's a big opportunity to sit between kind of traditional called companies who need to harness the power of quantum computing and the quantum computers themselves. So there's a whole ecosystem between those two. Like how do you take kind of, if you're talking to a bank or you're talking to a pharmaceutical company, and help them understand how are you going to use quantum computers? Here's what you should be thinking about. Here's how you prepare yourself. And we could play a role between those two it's software companies, it's cloud companies. There's a whole ecosystem between those two. So I would focus on that area. And then on the non-compute side, I would say that's underinvested in right now. That doesn't have nearly the level of focus that it probably warrants. So if you can find opportunities outside the computing side and in the sensing side, I think that's going to develop over the next 2, 3, 4 years, so that as that becomes more clear, investment dollars will pour that direction.
So sort of a broader question that came in, what do you think is the most interesting opportunity in the telecom space today?
Well, most interesting opportunity in the telecom space is to be part of one of these big private equity companies who are raising, funds that are many billions of dollars in size. And, if you get yourself in one of those, there's so much money that they're going to need to spend. And with the 2+20 formula, people are going to enrich themselves just in the process of doing so. But in that same statement is where I would put a little bit of caution in that there's almost too much money that's been raised and to focus on at least the infrastructure side of telecom. And I do think that the big internet companies, the FAN companies, have developed enough of their own network that they squeeze the ability to make money if you are kind of a communications company. So I think it's a little difficult to develop business plans, in the area I used to be in, and expect to make a really good return, at least until things kind of get readjusted.
Mm-hmm. Yeah, and this may be sort of related to that as well, Dan. The question came in, if you were looking at the broader market today, what assets do you think offer the best risk sort of return trade-off?
Well, you're seeing more and more companies outside of the US and across many different countries who are beginning to learn how to develop scaled up tech-enabled companies. So the number of unicorns that are coming from other parts of the world today is so vastly different than even 2 years ago. 2 years ago, you count them maybe on 1 or 2 hands. Now you're starting to see them pop up at a more regular cadence. And I think as success begets success when it comes to an area like this. So I think the countries that are starting to produce unicorns are starting to crack the code. They're starting to have the ecosystem to support it. And the entrepreneurs are learning from the successful examples. And I think you're going to see a spawning off of a lot more, tech-enabled companies that have business models somewhat similar to success stories that we've seen in US or China, but developing it for their ecosystems. So I would say that's an area that I'm pretty interested in.
Mm-hmm. We had a question, how would you suggest an experienced executive could break into venture capital?
How would an experienced executive? Well, the first thing, an experienced executive, so most of the, particularly private equity or larger venture capital, they do need industry experts. Okay, so one way to break in is an industry expert. They'll want, if it's a communication infrastructure fund, they want to have people like me be part of their funds because I have the relationships in the industry, I have the insight about, about how the industry works. And, with their financial structures, they need to bring those kind of people in and they could support them quite well financially. So that's one way to break in. But the problem with that is you become kind of, you're kind of an outsider relative to the true game of investing. It's hard to transition from there and be part of the true investment team. That's a much harder code to crack if you're kind of an experienced executive. What I'm doing right now, I think is relevant to that question. There are a lot of tech entrepreneurs who've done extremely well. They now find themselves with very large amounts of personal capital, and they want to put that capital to work. And many of them want to put it to work through direct investing. They don't want to just invest in other funds. They want to put together a team and begin investing their own capital. And I would think those kind of groups would be able to more bring in people who are industry experts to make them part of the core team, as opposed to just being advisors.
Mm-hmm. Thank you. That's a great answer. Question going back, how did you identify the opportunity that became the Zayo Group?
Yeah, so part of it came from the venture I had done immediately prior to it, which was taking a public company that was about ready to go through its second bankruptcy, buying the stock and taking it private, and then breaking the company up and selling it in pieces to companies who were better situated in their geographies. So what I discovered there was the investment thesis of Zayo, and I chuckled a little bit because I actually had to have a hip operation right after I sold ICG. So I was laid up in the summer for like 2 or 3 months. So I would sit at my back deck. I'd have some of my former team come by to visit, and I just started to reach out to companies. So I called them the fiber orphans, companies who somehow made their way through the telecom meltdown of the early 2000s. They got through some set of process. They ended up as a business on the other side of that. And then most cases, they had accidental owners, what I called accidental owners, meaning whoever was owning them at the time never expected to be an owner. They picked up a distressed asset or they got spun out of a bigger company. And they were being forgotten about. Investors lost so much money during the meltdown that to bring up in a private equity firm, I want to invest in a fiber company, they'd kick you out the door. They wouldn't even want you to bring that up because they would remember that stupid investment they made 8 years ago that killed their fund and almost made their company go defunct. So I started learning there were a lot of these orphans out there. Investors weren't paying attention to them. If you could pull enough of them together, you could create a platform that would be tailor built for bandwidth infrastructure. So we actually invented that word, communication infrastructure, and called it a category. And now it's, there's funds being raised that are in the tens of billions of dollars that are communication infrastructure funds. That term didn't exist until we made it up.
Mm-hmm. Great story. Question came in the Q&A. What advice would you give to founding teams building infrastructure software / deep tech startups about finding product market fit?
Yeah. So the company I was most recently part of, I still am as an investor, but I took over as interim CEO while we moved from kind of a leadership team that was a deep science leadership team in order to bring on a leadership team that was much more business in their orientation. And a big part of that was this question here: how are you going to take kind of fundamental technology and turn that into real product? And I think finding, and a lot of times the answer to that question aren't obvious, and it could be not obvious for a lot longer period than investors are comfortable. You want that answer, and that answer doesn't always come right away. So I think you need to make sure, one, your investor group is aligned with the fact that the product fit is, and market fit might not be readily identifiable for some extended period of time. So if you're not aligned with your investor group on that, it could cause some deep problems. But I think bringing on business people early on in the process, people who are all about product, all about how we're going to sell, even before you know what it is that you're going to sell, will increase the intensity around needing to find an answer to that question that makes sense. If you leave it to the hands of an organization that's largely just the deep tech experts, I think unless you find that gem, that person who is very deep in the science but has some kind of business, or intuition as to what that answer is, companies could get stuck. You got to bring in people who are more business in orientation to complement. Easier said than done, because the people are more technical, don't necessarily want to bring those type of people in, to give them the share of the power that they need in order to guide the company.
So this question, I think, kind of maybe touches a bit, asking, how did you get into the founder side of entrepreneurship early in your career, and how did the MBA prove helpful to you?
Well, I got somewhat lucky on how to get in, but the reason I was able to be so impactful so quickly, I think, is directly because of the Chicago MBA. So I was fresh out of the MBA program, and I was still with the Meritech, but I knew I wanted to be on the attacking side of competition, not the defending side of the monopoly. And I got fortunate that one of the two companies that had the most momentum in the early competition with the Bell system was, for all practical purposes, headquartered in Oak Brook. Officially, they were headquartered in Omaha, but the whole operational headquarters where all the presidents of the divisions were in Oak Brook. So I had been following them for my last year or two of business school, and wanted to get in, and was able to crack the door and get in there. When I walked in there, it was really interesting because I was part of what was called the development group. So we were leading the charge on expansion. Well, unlike Ameritech, where I was surrounded by people who came from Harvard and Yale and had this degree and that degree, and I was just trying to get my MBA to keep up with them, I now went to a group where they looked at me like, oh my God, you're a smart guy. You got an MBA from the University of Chicago and an engineering degree. And most of them were kind of, kind of entrepreneurs you picture as people are just trying to scrape by and do whatever they need to do to be successful, but without a lot of formal training and background. So my MBA skills kind of will help take what was MFS to a whole different level, because now we were able to apply a lot more analytics, a lot more discipline to what we were doing. And I was able to get kind of a full group of people to embrace that. And it's what allowed my career to blossom really quick.
Question about who are your role models, business or personal?
Well, one of my role models, ironically, over the last 10 years has been a guy by the name of Brad Feld, who is, and it was because he's a venture capitalist, the most prominent one in Colorado, and pretty prominent overall. And what he helped me understand is how to use a platform to be much more impactful in the community. So I feel like I followed somewhat in his footsteps. He always, as busy as he was and as much time of his that people wanted to consume, he always found time to be supportive of the entrepreneurial ecosystem around Colorado, and in his case, as in recent years, much beyond Colorado, maybe even global. So he was a role model in that sense to help me understand how to take what I was doing, which was very, what I would consider inwardly focused, and make it much more externally focused, and how to understand how to help others who are on similar journeys. Another one who I would say is a role model right now for me in a really big way is Linda Rottenberg, who is the founder and co-founder and CEO of Endeavor Global. And I think the impact she's having on a global stage is grossly underappreciated and is dramatically impactful in establishing kind of an organization that is supporting and making a difference in so many different parts of the world by finding those scale-up entrepreneurs and finding groupings of people who will help them be very successful. So I would say she's helped me understand that the world is a lot smaller than maybe I've perceived it to be, and how we're able to, by collaborating with one another, take what we could do locally for me here in Colorado and maybe Colorado and Chicago, but be able to be impactful on a much more global scale.
Mm-hmm. We have a question about how do startups reach out for potential funding to Endeavor Catalyst, and at what stage?
Well, Endeavor Catalyst is a rules-based investment fund, one that's doing extraordinarily well, by the way, but you have to be an Endeavor global company in order for Endeavor Catalyst to participate in your cap table. So the question really would shift is, are you the kind of entrepreneur and the kind of company that would make it through the Endeavor process and become an Endeavor global company? If so, Endeavor Catalyst investment kind of comes along with that, if the CEO wants it. Well, almost everyone does, but that's not required. That's up to the CEO and the an investor group. But becoming an Endeavor global company is a pretty intense process, and it depends where you're geographically headquartered too. Because if you're in New York or San Francisco, you won't even qualify. There's plenty of support structure around those kind of communities. But in areas like Brazil, and we've got a Colorado branch. There's a Detroit one that somewhat covers Chicago, but it's a big deal to become an Endeavor global company, and you get all kinds of support from extraordinarily successful entrepreneurs across the globe who want to see you be successful.
So you serve on the Polsky Council for Entrepreneurship at Chicago. You're chair of Endeavor Colorado. You're on the Strategic Advisory Council at Colorado Boulder. At what point in your career did you start to go to this notion that you wanted to give back? And what advice would you have for current students and fellow alumni as they think about, at what point do they want to start getting involved and giving back?
Yeah, I would say it started for me probably 20 years ago. So after I left level 3, but sometime around when I was doing ICG and certainly before Zayo. And what you'll hear from a lot of entrepreneurs is that they don't have time. It's amazing the people who do make time for this, how busy they are. I mean, when I was building Zayo from nothing to a company that exited for 14 billion, I would find time. I mentioned Brad Feld was one of my role models, and I think that's what he taught me. He was extraordinarily busy, but he always found time to support other entrepreneurs in their journeys. Now, sometimes you have to be selective in how you apply your time, but you will get more out of it for yourself than you will give, no matter how much time. And if you're scaling a company or you're starting up a company, being more engaged with others who are in that journey, maybe behind you in that journey, maybe ahead of you in journey, but they're in that journey, you're going to learn from them in ways that will help you in your career and whatever your aspiration is, while you're helping them in their journeys as well. So I would say find the time, as hard as that is for a lot of folks, given how busy they are in their personal and professional life. But if you find that time, you will get out of it at least as much as you give.
So one of the questions came in was, how do you advise entrepreneurs about the major pitfalls in scaling startups? Just based on all the experience you've had, what are some of the big pitfalls that you have seen?
Yeah, it's funny. There's so much ecosystem around startups, and there's so little ecosystem around scale ups. And startups are easy. I mean, any of us could start something up. I mean, it doesn't take much to start up a company, a handful of people, and whether it's a good idea or a bad idea, you could start a business around it. But scaling up a business is much more difficult. It means that you have to get through that startup phase and have a lot of opportunity in front of you. And then you've got to navigate a process that can be very daunting. And and a lot of us, by our nature, you try to do it on your own. You try to do it with a team that you're assembling, maybe an investor group that you have. But it's such a unique journey that finding others who have gone through that journey and aren't necessarily vested in your company, so they're not your investor group, but finding people that can be there as a support group when you need it, who can help you in the tricky parts of it. I think what a lot of them will say is, those talent. Are you surrounding yourself with the right type of talent? Are you sharing the economics with them so that they're going to stick around and be part of it, and are trying to create value as hard as you're trying to create value? Are you sharing in the mission? So is it about, take the WeWork example or the Uber example, it was more about the leader than it was about the company itself. So I think that's a trap many people fall into. How do you make it about the company's mission, the company's impact, not you as the founding executive? And a lot of times, the executives and the team members that helped you in the early stages aren't the right people to help you in the scale phases. And if you wait till that becomes extraordinarily obvious, it's probably too late. So how do you make, you kind of know it, your instincts will tell you that early on, that I'm not sure this is the right person to head up engineering, or this is the right person to head up sales, but it's very hard to act on that. So you end up waiting an extra year, 2 years, 3 years, and maybe that was too late. And that caused you to have to sell the company instead of continuing on the scale journey. And I guess the last thing I would say to kind of bring the overall thing together, what's always given me the fortitude to make the harder decisions was the broad success of the company is what's going to be good for the most amount of people. So put that ahead of an individual or your own reluctance to make what could be a hard decision.
So a couple more questions, Dan, about your personal journey. First one is, when did you know that you had the entrepreneurial fire to start new business ventures?
Well, one thing that makes a lot of entrepreneurs successful is they tend to be insecure, and they tend to need to prove to themselves first that they could really accomplish something. And when they accomplish something, they need to prove to themselves that they could accomplish the next thing. And certainly that level of insecurity was a big driver of my career. Like when I was a big part of the MFS success story, was I in the right place at the right time? Did I get lucky? Did I just, ride a curve? And yeah, I did well individually and rose up through the system, but that was one circumstance. And then when we got together and launched level 3, at that point, I was, one of the senior most executives, from launch point and thereafter. But again, you find yourself in a situation where, well, I wasn't the founding executive, and and I'm not really sure I didn't have these relationships, do I really deserve to be here? And am I really, good enough to do this? And then it gets to the point, for me at least, when, I got to Zayo, can I be the founding CEO? Can I really run something? And yeah, I proved I could run something and make people a lot of money in what we did with ICG, but can I do that and build a company that could really be a lasting company and something that can develop its own brand and its own reputation? So a lot of times what's you don't know that you can really do something, and you feel like you got to prove to yourself you can do it, and that's what drives you to that next step forward. So I'd say I'm not sure I ever know that. I still to this day could honestly say to this group that I had a lot of circumstances that were right place, right time, and I took advantage of them, but so many times it could have gone against me, and I would have never stayed on the journey I was on. And I don't ever look past the fact that things kind of fell together for me in a positive way at many critical points in my journey. And that didn't have to be. It could have fallen another direction, and it's not like I would have gotten back on the right track had they have done that.
Thank you for that, Dan. So another question, sort of looking back, if you had, what would you change, if anything, through your journey with these companies, if you had the opportunity to sort of look back and reflect on what you achieved?
You don't know if you'd be successful if you did things necessarily differently, but I can look back at many moments of my journey and cringe at how I behaved and cringe at how other people behave. Intensity is a double-edged sword. Sometimes intensity was, too extreme. You kind of ran over people and back over them when you already ran over them, and you look back and like, was that really a necessary part of the journey? There was a time during the late 90s when it was the dot-com boom and the telecom boom, and it was like party like it's 1999. It was literally what was happening. And I remember kind of things I was part of, in that period where I'm like, oh my God, what were we thinking? What was I doing driving around a yellow Ferrari, in Colorado when I was, X years old? There was no reason for that. And to this day, people ask me about it, and I change the topic as quickly as I can, because that's not something I felt good about. But that was minor compared to what people were doing in those days. I mean, people were going crazy with how they behaved, and yeah. So I look back and say, could I have accomplished what I've accomplished and done it with a little bit more soft skills, a little bit more respect for people around me, and more of a leader in that sense than I was in the earlier stages of my career.
Thank you. So maybe I'll shift to a couple of questions about investing. First one is, what do you think about the opportunity for communication infrastructure, but in a place like Latin America, countries like Brazil?
Yeah, I know there's a lot of activity in those countries. I haven't gotten deeply involved in those activities. I was on the phone just a few weeks ago with a group that's building an investment plan around Mexico. That I do know that these markets are very underdeveloped from a communication infrastructure standpoint. So there is tremendous opportunity, no question about that. But I think you need people on the ground who are part of those cultures and part of those communities, because the one thing about communication infrastructure is it's a physical set of assets. If it's a data center, you can protect it. If it's fiber or radios, they're scattered all over the place. So how do you get rights on poles and the rights in the ground, and do the cultures and the legal system honor those rights, or do they only honor those rights for a certain period of time, and then then you may lose them? So property rights matter a lot. So you really have to know the environment that you're in, and have, I would think, very influential people in those communities be part of the business plans, or else you may find yourself ending up with a lot of ownership of infrastructure that is compromised over time. So tremendous opportunity, but I'm not as close to that as as maybe I could be or should be.
A question, do you invest in VC funds? And if so, what do you look for in a fund that might call your attention?
I do have a lot of investments in private equity and VC funds, and how focused is the fund matters a lot. A lot of times a fund will develop a great reputation, but you got to pay a lot of attention to as funds get bigger and bigger, and the leaders make a lot of money, which in these funds are making a whole bunch of money. Will that next fund be the same kind of focus and energy as what led to the success in the past? So you could be entering a fund when it crossed over and people are more worried about their yachts and their third homes than they are about finding that next big opportunity. So I think that's probably the one risk of relying on past reputation. So maybe finding the individuals who are part of the successful funds, but they break off to do their own thing. That's probably where a lot of the opportunities lie. But more what I'm doing going forward is to kind of take what is largely a portfolio that's built on investing in other funds and then investing directly in tech-enabled companies.
So going back to your stay at Booth, sort of, what do you remember about your time? Any courses, professors that you remember, or people who ended up being mentors, or people who were sort of connected to you through your career?
Yeah, I mean, one in particular, and in a gigantic way. So one of my very first classes was with a professor who was just starting his career journey as a professor at the University of Chicago, and that was Steve Kaplan. And I remember, almost like it was just a year or two ago, I remember being in his class, and his teaching style at the time was very unique relative to my experiences. How he would use case studies and the case studies that he would choose, and how he would get the class to to have to out loud kind of solve the problem, and he'd pick ones that required a combination of analytical understanding, but also a real strong kind of business sense that went beyond the analytics. So he's the one professor I kept in touch with, and then I was fortunate enough to convince him to be on my board at Zayo Group for about 6 or 7 years, up until the time we sold the company. So that was a great experience there. And what he's done on the entrepreneurial side of University of Chicago is why I'm so actively involved in University of Chicago. I think what we are doing there is impactful again on the world stage. We're producing a lot of unbelievable entrepreneurs with strong business discipline, and even companies that are coming out of the system there and now starting to apply that on a more global basis. So I know he's, there's a lot of people who are a big part of it. Steve's a big part of that. But that's why I'm so excited about what University of Chicago is doing right now, and why I'm so involved with it.
Another question came in, Dan, was about what advice would you give to somebody who's a current student about what should they do to take advantage of being at Booth?
Oh, be involved. I mean, I went to school and took the evening program and was working full time. So my biggest regret was not being on campus a lot more. I should have taken a year off of the work life and at least completed it full time. I'm not sure if financially I would have been able to do that, but get involved in activities. Even if you're not sure if you have a passion for a certain area, the people you meet, and the exploration you can do at these important years of your life, it'd be so easy to pass on those and say, I'd rather go watch a football game, or I'd rather go, hang out at, wherever you hang out, as opposed to I'm going to go get involved with this and I'm going to try out that, and, get involved, get engaged. If your passion's, in the area of entrepreneurship and innovation, University of Chicago has so much to offer. Lean in hard.
That's great advice. One question, and then I'll go into a personal question towards sort of the end. Question is, you talked earlier about climate, and so you view climate tech, I take it, as sort of very important and a great area. Question that came in is, how do you view the current level of disclosure to investors of those types of information by corporations? Do you feel like they should be providing more, and sort of what is your perspective on that?
I think gradually providing more is the right path. I think certainly what's provided now compared to even 2 or 3 years ago, the expectation, the bar that's being set is rising. I think it should continue to rise, but not too steeply, too quickly. You know, I mean, dealing with how to be responsible from an environment standpoint, you know, it's easy if you're on the sidelines looking in than if you're in the middle of things. Like, you know, take what's happening right now with energy prices going up and up and up. You know, how much of that is tied to, you know, decisions we made with the new administration in the U.S. And it's like, okay, is it better that we're producing energy in other parts of the world and importing it in and shutting off the valves here? I don't know. I mean, to me, it's like in the process of wanting to enforce certain types of outcomes, you know, you could not realize, you know, the unintended consequences of that. So, you know, I think gradual change is better than sudden change in this area.
Mm-hmm. Question. So what are some of the best books you have read in the past decade?
Yeah, I tend to gravitate toward business books on stories where things have gone wrong. So, you know, the two very recent ones that I listened to, not quite read, one about Uber and one about WeWorks. You know, if I trace back over time, there was one called Disney War that was great when Disney went through some of its struggles. Books on Enron, there's two of them. One they made a movie out of. They were fantastic. There's things like there's just a, you know, I tend to, for whatever reason, gravitate toward those books and try to learn from what happens when business leaders maybe get ahead of themselves, maybe behave not responsibly. I don't know how much that is entertainment versus how much is learning. Barbarians of the Gate was my favorite, probably of all time.
And so just given the shift that you've made in your career, do you miss your operating role? Is that something you think you'd ever go back to?
No, I will definitely not go back to it. Do I miss it? I enjoyed it. It was an unbelievable journey, and I'm quite fortunate to have gone through it. But I've been a CEO for 20 years and working at a high level of intensity for 35 years. I don't need to go back. So maybe that's the answer to the earlier question. I don't feel like I have to go prove that anymore. So maybe now's when I finally realized I've proven I could do it and don't feel like I need to go prove to myself or anyone else I could do it again. So no, I won't go back into an operational role. But I do want to stay very active from a, you know, investor standpoint. I'm building a team of people and want to be very active with the companies that we invest in, but not necessarily from a governance standpoint in a way that would be more helpful to the CEOs and the investor group.
So Dan, we're out of time. So I want to thank you for being so incredibly open and candid with your answers and talking about your journey and giving just fantastic advice to all of the participants. We're obviously incredibly proud of what you've achieved as a Booth alum, and we're really also incredibly grateful to you for all that you're doing to give back to the school, give back to the community through your involvement with Polsky and so many other ways. So thank you for taking the time to be with us today. And yeah, we really appreciate everything that you do for us.
Great, and I appreciate being part of something like this, but I more so appreciate what you guys are doing at University of Chicago to make it an even more impactful institution that touches so much of the world that we live in. So thank you for your leadership.
Thank you, Dan. Thank you, everyone.